Okay, I don't know if you remember, well, if you were here and you remember a couple of years ago, I think we had kind of a DLGF conference where they had so much going on that they were doing almost all of the presentations, and I think we kind of wore them out. Well, now we get our turn. So this is really an SBOA conference, and so we've got a lot of, as you notice, a lot of presentations this time. We are really focusing, just as our board explained this morning, on doing our best to help you, but also make the audit process itself smoother, both for your offices and for our field, and that's what we're really focusing on training to try to get that process as efficient as possible. So our first presentation, which we're giving in all of the different conferences, is kind of a back to the basics for some of you, and some it may be new, on exactly what the audit process is, what are we doing, and why do you care? And so that's what we're going to focus on for this morning's presentation. So we're going to start with what's required to be audited by State Board of Accounts. And again, we're going back to the statute. Right up there. So Indiana Code 5-11-1 is the State Board of Accounts statute. We have our own little statute. So interesting reading. In Section 9, it does require the state examiner to examine all accounts and all financial affairs of every public entity. So we are required to be out looking at the public records. And that's everything from the state itself and the counties down to the special districts and the townships. So there's a lot of units that we do audit. And Tammy already touched on this, federal grants. That is an important audit. If you expend, as a county, this is all of your grants together, as a county, if you expend more than $750,000 in 1 year, you are required to have a federal audit by the federal government. And that is something we do when we're out there. It was a single audit where we would do the financial statements in the federal. We are going to have specialists, so it's going to be tweaked just a little bit, and Ricky's going to talk a little bit more about that tomorrow. But just so you know, that is part of what we do out there, is to get that federal audit. When we're done, the audit report itself and our report on the major programs that we've audited is loaded up to the federal clearinghouse. So when you're applying for any of your departments or you are applying for grants, that is one place they can look to go back and see what your prior history is as far as your federal programs. They do that. They really do look at that, and sometimes they make restrictions a little harder. Sometimes you don't get the grant. So it's really, those federal audits are really important for the future of your federal funding. So be sure that you understand that and understand why we're doing that. Another thing that gets factored in is if you have debt. If you have debt, then there's probably a bonding agency that is reporting on that debt, and those bonding agencies require that your audits be current within a certain time frame. They do send us lists if we don't have, and that happened a lot last year, that moves you up. So if they're sending us a list and saying we need an audit currently on this county in order to go ahead with our rating, that's going to move you up on the list, and we're going to try to get in there and get those done. But that's very important that these audited financial statements are available to them, and that's another factor that we do when we're auditing. Okay, this slide shows the different types of engagements that we do. We talked about the federal single audit, and again, Tammy touched on having a federal specialist, but that is part of the audit process if you have expended that $750,000 or more, that we come in and look at your federal programs. We choose major programs based on a risk assessment that we do that the federal government sets out. We use the attributes and the requirements for the federal grants that we're auditing, which is why it's so key to have a specialist in that area to understand what they require for those grants, because they do vary from grant to grant, to understand what is required and be able to do those audits and place an opinion then on how well you are complying with that. Underneath that is audit, and all units get an audit. and that is financial statements. So we are taking, as Tammy said, when you put your annual financial report in on Gateway, it generates a financial statement. We audit that financial statement and put an opinion on that. And for every unit, that is something that we do, again, to provide that level of assurance on those financial statements. The bottom two, compliance reports and centralized compliance reports, you can read what they do. Those are for the smaller units. This is not something a county is going to have. You're going to actually have an audit, but there are, if you have small towns in your county or special districts, townships, we did quite a few centralized where we brought the information electronically into the office, did them centrally, and got that out to knock some of the township audits and catch them back up. But that's not something really that a county is going to do. If you've been through an audit, you will be aware of this. If you have not, the auditor's office is going to be our main contact. We go to you guys first. I mean, that kind of makes sense because you do the financial statements, and that's the first thing we're doing is auditing those financial statements. And so your office and the treasurer's office are departments that always get audited because that's the support for those financial statements. In addition, we do audit other departments within your county. We'll go over that in a little bit. There's not, we don't audit every department every time. We do kind of an assessment on that and some cycles and stuff on what we're going to do. If they're a department that provides a supplemental AFR to you, like the clerk's office or the sheriff's office, we have to audit at least enough to support that supplemental financial statement because that's part of the financial report itself. One thing that we do ask, and we tell the other offices that we do ask this, is that you let your county know because we're coming to you. So if you can let, whether email or word of mouth or however big you are, that we are there to audit and that we might be pulling their department records just so that they're aware of it before somebody shows up in their office and gives them a heart attack. It's just a good idea. Keep them all on board on that. So what's the goal of our engagements? First of all, we are providing an opinion as to the material correctness of the financial statements as presented. And that goes in the independent auditor's report. And what it's telling a reader then is, are these financial statements materially correct? Materially correct does not mean perfect, does not mean there is no mistake in it. It means that materially, for the most part, it is providing a accurate picture, financial picture for your county. And that any errors that we have found have either been corrected or they're not material enough to mislead someone reading the financial statements into making a different decision or making a different understanding of where you are financially. An unmodified opinion means that we have no modification to the opinion. So when we place this opinion on the county's financial statements, that's what you want to see, the unmodified opinion. We are telling anyone who reads this report, whether it be a bank or a governing body or a citizen, that they can rely on the information in the financial statements in making any decisions they have to make. Okay, so that's what that unmodified opinion means. It is important, and that's what we're all working on. If the opinion is modified, that lets the reader know there are reasons that need to be taken into consideration when relying on the financial statement information. So you can't completely rely on it, but there might be a scope limitation. So it might say, for example, if a county did not have a particular area that we could, something had happened and records were not available, we couldn't audit a particular area or a particular department that was material. We'd say, with respect to this, and we would state what it was, the financial statements are materially accurate. So they know when they're looking at them, for the most part, they're good, but this one area is something they really cannot rely on. That's where you're modifying it. Okay. So there are various reasons to modify it. If based on audit evidence the financial statements are not materially correct and we can determine they're not, you can also get an adverse opinion. We'll talk a little bit more about that. If there was insufficient information, as I said, like certain areas of the records were not available for audit, so that we could properly determine whether they're correct or not, that's going to be a scope limitation, or we're going to disclaim. We just say we just didn't have enough information in this area, or we're just disclaiming a particular section because we don't have enough information to place an opinion. The second thing we want to do with our engagement is provide the reader with non-compliance of any federal requirements. So when we do the federal audit, along with the financial statement audit, you can get findings. A Section 2 finding means that there is something, the most common one I think you've probably seen is a lack of internal controls over the preparation of the annual financial report. I can say that really quickly because that's a very common one. But that's a Section 2 finding. The report may be materially correct. You might have an unmodified opinion, but we do not feel that there are sufficient controls to make sure that that is the case every single time. And so you might have a Section 2 finding on that. Section 3 findings, and they're separately identified in the report, is on the particular program itself. So it's going to be on the Child Support Enforcement Program or Department of Transportation, NDOT, or Highway program, or public safety one if your sheriff is getting one. It's going to be on that particular program, not everything as a whole, just that particular program. Okay. And then within the supplemental report, and again, kind of a little bit because we're reassessing on doing the separate financial statement report and federal report, so we may be adjusting how we do these supplementals, but in the past, up until July, we issued the supplemental report, which had all the findings gathered in one place, so that may change. But within that supplemental report, by department, would be the audit results and comments, ARCs, if you hear our FEs talk about it. That's non-compliance with either a state law or a uniform compliance guidance that comes from our office. And again, if you go back to statute in Indiana Code 11-1-24, it authorizes the State Board of Accounts to establish these uniform compliance guidelines. So by statute, we are supposed to set up these uniform compliance guidelines. So our state examiner directives, the manuals, and the county bulletins make up our uniform compliance guidelines. So that's, again, one of the projects that Stephanie is going to be working on in the next year is to make that more accessible, hopefully by topic, but we're working on getting that platform searchable and accessible so it's a better source for you to use. But that is the uniform compliance guidelines. So if you're getting a comment, it's either on a state statute or it's on one of those compliance guidelines, just so you know where those are coming from. And finally, we try to provide management with less significant non-compliance, so it's something that we do not feel is significant or large enough to be included in a report, in a public report, but we think you need to know about it so that you can either prevent it from getting worse or take care of it at the time. And what we do then is issue a management letter. This is not a public document. It's a letter that goes to the department head and to the governing board. If it's on the financial statements, it's going to go to the auditor, to your council and your commissioners. If it's on the sheriff's department, it's going to go to the sheriff, your council, and your commissioners. That way, you can see what we're looking at and then make a decision on how you want to address that. That is not a public document. We consider it part of our working papers. It's not something we put on our website. So it really is just for you as a management tool to look at that and, again, evaluate what those findings were that were not significant enough to be included in the report. One thing to remember is if there are times where we will put it in the report and your FEs will tell you this is something you need to look at, and if you do not correct it, it can become a reportable condition and it could be moved up into the audit report. So please don't ignore the management letters. Make sure you pay attention to them. If you have questions about them, ask those questions and make sure that you're addressing those. So the whole engagement process officially starts with the entrance conference. Any of you have been through that know it doesn't quite work that way because you get phone calls or they show up and they might be there a day or two before they actually sit down with you because it takes time to schedule all of this. Also, we are currently, as much as possible, trying to do more of our preliminary audit work prior to assigning the audit team and getting out on site. We are, as Tammy pointed out, sending out forms, your financial statements to review with the forms on that. I'm going to go over those forms tomorrow so you know what they are and what we're really looking for in that. But we send that in advance so that you have time to work on that and be able just to hand it back to the FEs when they come out. The upload process, which we're going to talk about tomorrow a little bit. We have a guest. We're going to try some technology if Ricky can get it to pull it off because you know it won't be me, to talk about the upload process and answer some questions on that. But the information not only that you are uploading, but your departments are also uploading right now, recorder, treasurer, clerk. We're taking that information and pulling it into the project and doing, again, some of our preliminary work before we go out. What that does is mean, hopefully, that we're less time on site, so we're taking up your precious office space a little less, and your time even more, than we have in the past, and that we're more efficient, that when we come out, we can really focus on what we need to get done and get that work done. And I had not heard that till this morning, but as Tammy had pointed out, 87% of the time that we had allotted, that's pretty good because we didn't have a whole lot of extra time built into that. Believe me, if you ask our FEs, they'll tell you that. It's really bare bones. So the fact that they're able to get in and get this work done is great. And that's what we want to do so that we don't get behind again. I mean, we worked really, really hard to get that backlog caught up, and we really don't want to get behind again. So at the entrance conference, you will always, as auditor, will be included in that entrance conference. And then we also include usually at least representation from your governing boards so that they're aware, again, that we're on audit, that we're on site and we're doing these audits. So I guess I got jumped again then. So again, because it's the financial statement audit is the first thing that we're really, really looking at, and that's really your area. That's why you are, you're the fiscal officer for the county, and that's why you're pulled into these audits, or these entrance conferences. What we discuss there during the entrance is let you know who's going to be on your team. There'll be a team on site, so there'll be a lead auditor, depending on the size of the county, and several FEs. Some of them may be brand new. And then all of these audit teams have an audit manager that is actually overseeing maybe 3 or 4 or 5 audits at the same time, so they kind of bounce from site to site. If you've been around long enough to remember field supervisors, that's what an audit manager kind of does, is what that field supervisor used to do. So they're available to you. If you have questions, you can ask to see them or ask when they're going to be there. They should have a fairly regular schedule, I believe, not having done it. I'm guessing on that. And then we have audit coordinators that also work to deal with issues that come up and work on the report reviews. So that's what the entrance does, is introduce you to those people. It also sets up the exchange of information. How do you want to be notified if there are issues? How does your governing board want to be notified if there are issues that raise to the level that they need to be aware that we found something? Do you want phone calls? Do you want emails? How are we going to set this up? What the audit objectives are? What are we trying to what are we trying to do there? If you have questions, be sure and ask them at this time. Management responsibilities, what we expect from you as the unit being audited. The procedures in general, we do not go line by line through the entire audit program, because that would kind of defeat the purpose of doing the audit. We do not look at 100%, so we're going to be sampling, so we're not going to tell you in advance what we're looking at, but we do give you the general audit procedures themselves so that you can understand kind of how we're going to go through this and what we're going to try to get done. Some of the records that we're going to need from your office, so they might go through a list and give you a timetable, depending again on how large and when they're going to kind of need these records. They'll give you a start date and a start date. They're probably already there. I know that, even though we say that. And when they expect the report to be done and issued. So you have kind of a time frame on that. Let's see if I missed anything. Okay, and I talked about this briefly. We're going to set up whatever method of letting you know of any issues that we have throughout the process, and also your governing boards. And again, hopefully what the field examiners will explain is the objectives of the engagement, what the responsibilities are. They also talk about what the audit fees are, so you have an idea what this is going to cost based on those budgets, those time budgets that we have. If we get done in 87% of the time or 82% of the time, obviously that's going to go down. There's a form that you will be asked to sign at the entrance conference. Internally, it's our Form 14. You don't need to remember that, but that's a form that goes through all of this information and has it in writing. You can always request a copy of that. Normally you do, but if you've been through it about 12 times and you've got it memorized and you don't want a copy, that's fine, but you're always entitled to a copy of that, so you have a list of what they've already talked about you can refer back to. Okay, so now we're getting started on the audit itself. Tomorrow, as I said, we're going to be discussing some of the forms that we're sending out to you in advance so that you have some idea of what they are and why we're asking you to complete them. You do need to remember timing, which is really hard. It's even hard when I was auditing to keep my mind wrapped around what time frame we're looking at. We are physically in your county in 2019, but we might be looking at 2018 records, or if you're a county that does not get audited every year, it may be 2018 and 2017 and 2018 records. And so you have to kind of keep in mind that what's currently happening may not have been what was in place a year ago. And so some of our questions seem hard to understand. It's because we're trying to keep that focus together. And again, I'll go over more of this when we talk about the forms themselves and updating them. But just keep in mind, we are looking backwards. We're always looking backwards on that. This becomes especially important when we're talking about internal controls. For any of you who have gone through the repeat finding and corrective action plan and have written controls. So we're coming in, and others probably have seen it. You might have, based on the prior audit, instituted some controls, but maybe it was halfway or 3/4 of the way through the year. So part of the year you had the controls in place and part of the year you didn't. All of that gets factored in because it's a timing thing. One thing we do is look at your internal controls. A lot of those two of the forms we're going to be talking about have to deal with some of that, of what we're looking at, and I'll go over those tomorrow. But we need to evaluate what your controls are in place and how effective they are. We probably have to test them at some point. So we will test internal controls. We will do substantive testing. That is where we're doing what they call sampling. And we'll also do compliance testing. So if you remember when we talked about internal controls in the past, and I'm sure all of you do because it is your favorite topic, just like mine, one of the components of internal controls is risk assessment. And not only do you have to do risk assessment in preparing your internal controls, our audit team does a form of risk assessment in determining how to focus their audit. And so when they're looking at your internal controls and finding out whether they're designed and implemented properly, and how much they can rely on them, they are determining also what areas are the most risky in your county. And it is not the same from unit to unit, which is why they interview you. Things like a cash collection point is always going to be a little more risky than where money is coming in electronically. So it depends on the volume of what they're getting. But that's when we're looking at departments, which ones do we really need to look at? And we do that in the preliminary part of it, is identify the risks within the audit itself, and the risk that we're looking for is what are the risks that the financial statement is not materially correct and it has not been detected and corrected. So we're looking at risk to the preparation of that financial statement. Okay. So one of the things we ask you is, how do you address risks? Because that's an important thing. If you're on top of it and we rely more on your controls, then we need to do less testing. So it saves time on the other end, which is why controls are very, very important for the audit process as well, for protecting your office. What the FE will do is try to assess the key areas under a regulatory report. Those really are your receipts, your disbursements, and your cash balances, because that's the basis of your report. There's some changes in that too, you'll be happy to know, and we'll go over those tomorrow. So the first thing we do is look for things that are inherently risky. That means if no controls are in place, where do we expect to see the highest risk? And again, something like a cash collection point, a transfer station where there's not a lot, there's one person out there and doing all of that. Maybe, if there's a lot of money collected to the highway and there's not a lot of usually not significantly, but if they do collect a lot of money, that could be a riskier place. That's with no controls in place, just how risky is that to your receipts. Payroll is often considered more risky because it's more complex. You do in public safety, your sheriff's departments, your EMS, their schedules and stuff, so there's just a higher risk because it's more complex. So those are the things they're starting out with, what is inherently risky, and then we look at what controls are in place to address those risks. And together, the inherent risk combined with the control risk produces our audit risk, which helps us focus again where we need to focus our testing and where we need to look at things. So how will this affect your audit procedures? So the FEs will determine what areas they can rely on the internal control system, what areas need to be reviewed maybe in more detail. Areas with good internal controls will require less audit testing, since we are relying on your controls in those places. Areas with weak controls or no controls will require more testing, more time, in order to gain the evidence we need to determine whether or not your financial statements are materially correct. Once a field examiner has completed these and identified the risks, the audit procedures can be planned, and then the testing begins. Bear in mind that throughout that, if they come up with more risks, as they're doing testing, as they're getting out to the departments, this is a constant process for them. They're going to go back through some of this risk assessment and re-identify and possibly change a focus if they find an area where there's some concerns. And in full disclosure, I would like to point out these wonderful pictures, not me. I borrowed this from somebody else, because if it were me, it'd be white with black letters. So if you're enjoying these. Okay, my favorite topic of all times, internal controls. Internal control is a process that's executed by the officials and employees designed to provide reasonable, not perfect, but reasonable assurance that the objectives of the political subdivision will be achieved. There are 3 broad objectives, if you read your internal control manual, which I know you all did, for any entity. Operational objectives, which is how efficiently and effectively is your office getting its job done. Reporting objectives, where we come in on the audited financial statements, both externally and internally. Not only the financial statement that you are posting on Gateway for all of the public to see, but as well your internal reports to your governing board or to your department heads, to let them know where they stand, where their funds stand, and where they're standing financially. And the third compliance objective is to adhere to laws and regulations. And again, for us, the 2 biggies are state law and the Uniform Compliance Guidelines. So our field staff does need to understand the controls in place so they can evaluate the design and implementation of those controls. you know, well, we'll go into that later. So if they are properly designed and implemented, that they're going to achieve the intended goal. So it's possible to have controls in place that don't do what they're supposed to do. And that's where we're going to show a control weakness to you, maybe in a management letter, maybe in a verbal, just letting you know. But that's one of the things we look at. What have you set up, and how well do we think it's going to work? It's very important, which a lot of you have found out, to document your internal controls as much as possible, and also document how you're monitoring those controls. So we're looking for things like a dated signature, initials on something to show it's been reviewed and approved, maybe an email back and forth saying, yeah, I've looked at this over and I agree with it, we're good to go ahead. Something that shows that those controls are in place. And so that's really important, that if you're doing the work, keep some track of what you're doing. And again, I keep saying that we're going to go over the forms that you're going to be filling out. There also will be inquiry with your office staff, probably with your departments, to kind of fill in some of the details on this. We may observe. We may come in and just watch how you do something to see how your procedures work. And a lot of it is inspection of documents because, again, there's that timing issue. We want to see what was being done last year, not necessarily for the audit purposes what's being done this year. What's being done this year is going to affect next year's audit, but we're looking backwards. So a lot of times it's inspection of documents. This is where we want to see those initials, emails, signatures, checklists, logs, whatever you're using to show what controls have been enacted over those financials information. If we do find any deficiencies, we will let you know. And again, it may be a verbal comment, it may be in a management letter. If it's significant enough that we feel it's really impacting the financial statements as a whole, it can be in the report as an internal control deficiency. Okay. We also look, in addition to statutes and the uniform compliances, we look at your local ordinances and policies. I know I get heavy sighs every time you ask a question and we say, well, what's your policy on this? Because some things are not in statute or in the uniform compliance, or it states in there that it refers back to how the county chooses to do that. Travel policies are a good example, okay? That's something that each county decides how they want to do. And unless there's a statute like state called meetings that overrides it, that travel policy is what we're gonna audit. Your salary ordinances for payroll, those are local policies, local ordinances, and we do look at those and make sure that you are complying in it. And what you will find in the uniform compliance, if you look in chapter 1 of any of the accounting manuals, is that one of our uniform compliance guidelines is we expect you to comply with your local policies. So, and to gather sufficient audit evidence, as I said, we do not test 100%. We don't look at every transaction that your county has done. And if we did, we would be there until you would be so sick of us, you would just be, praying for divine intervention. Historically, we did that. I mean, back in the day when we first started, they would come in and look. I think they were posting also, but they would come in and look at every single claim, every single payroll check, every single receipt. We don't do that. Okay. We do substantive testing, and that is defined by accounting and auditing principles on what that entails. But from your perspective, it's the random sampling. We may just take the entire population of claims, we put it into a random number generator and pull out a significant sample size to then go ahead and test, and then we expand that to the entire population. We might do analytical testing. It's also part of substantive testing where we look at what did we do last year, what are we doing this year, what historically has the trend been, do the changes seem reasonable for that time period? One of the things that we get a lot, and I just kind of want to address it really quickly here, the audit reports are going to have the non-compliance that we find that is significant enough to be in an audit report or possibly in a management letter. In the report itself, we say, There may be instances of noncompliance that we didn't find because we did not audit for the purpose of finding every single instance of noncompliance. So you need to be aware of that. So sometimes, other agencies will say, well, they said State Board of Accounts never wrote them up on this. That could be true. Does not mean that that is necessarily correct. It may just not have been in an area that we have looked at, or it wasn't a claim that we pulled specifically within that claim sample. I mean, you think about the claims you do for an entire year, and we're looking at maybe 120 of them or 150. It's easy to miss that. We don't look at every single payroll transaction. So there could be instances of noncompliance that we do not find. We don't put that in the report, again, that everything is wonderful. We just say, there were instances that we did find, and we notified you of them. They're in the report, and there may be others. So just keep that in mind. You are still responsible for your compliance, and so you need to be aware, which is why you attend these meetings, why you go to your continuing professional education, because you are responsible for being in compliance with both the law and the Uniform Compliance Guidelines and your local policies. So again, cash and investments, I guess that was on the previous one, is a big area because that's part of the regulatory report, total cash and investments of your county. So that's where we're looking at the reconcilement process between you and the treasurer's office, the treasurer's reconcilement to the bank, because that supports that information, whether or not total cash and investments is materially correct. We also look at your receipts, and we look at your disbursements. So receipts, we want to make sure that the money that was actually reported has been received, was received and belongs to the county, that it's been posted to the right fund in the right amount, recorded in the correct accounting period, and again, recorded in the proper fund. So we look for those things when we're testing your receipts. For disbursements, we're looking that that is an obligation of the county, okay? So when we get a lot of questions, sometimes we do get questions on, can we pay this? And we're back to, what is the business purpose of it? Is it an obligation of the county? That's what we're looking for in disbursements. So if there's something that is questionable when it comes across your desk, it's a good idea to get it clarified and get it documented, because if you're questioning it, we definitely will. So we need the background on it. So if it's for a particular purpose or reason that has a county purpose, make sure that's documented on the claim. Was it properly recorded and in the correct amount? So it's posting from whatever your system is for generating your checks or your electronic transfers. That is also getting into your accounting. So the disbursement is reported properly. Again, is it recorded in the correct accounting period and has been posted to the correct fund? Is that an appropriate use of that fund for that particular purpose? Okay, up to this point, I've really been talking about our regulatory reports, and so the focus really is on the cash and investments, receipts and disbursements. Obviously, if you're producing GAAP financial statements, then we have to audit those additional information that's in your financial statements, and so we're going to look at the receivables, the payables, the debt, the capital assets. So we're going to do more extensive testing for those than we are under the regulatory report, and we will be talking about GAAP tomorrow. Talking a lot tomorrow. And finally, we're going to be looking at compliance. So we're going to perform procedures to determine compliance with state statute, uniform compliance guidelines. We're looking at things like, were the deposits timely? Were the receipts and disbursements posted to the correct fund? Were the appropriate use of the fund? Did the disbursements exceed the certified budget adjusted for any additional appropriations? Were claims processed correctly? Were there detailed invoices? Were they mathematically accurate? Was there proof that the goods or services have been received by the county? Did the board approve them when necessary? The appropriate board approve the appropriate? And again, wasn't it appropriate use of county funds? When it comes to payroll, And as you probably understand, because most of your offices have to do payroll, that's a lot more complicated. And so we have to test that a little bit different. Often we do it analytically, but we do often, for compliance, we will do an actual test of payroll checks of a particular time period or throughout the year. When we're doing compliance with payroll, we are testing back. Does the rate of pay agree to the salary ordinance, the resolution, or the contract that the governing board has approved? Were there attendance and time records maintained? These do not need to be in your office, but they need to be available. So if it's we pull a payroll for one of your departments and we go to the department and ask for those time records, they need to have them. Was the claim or time approved? You should have policies in place on how payroll is approved, where those procedures follow to make sure that this person actually worked for the time that they're claiming. Was it recorded in a timely manner? We don't want to see payroll recorded 3 months after it occurred. You need to record it as it's happening. Was it a proper use of funds? Most of your payroll probably comes out of general, but there are other funds, MVH, for example, grant funds that may be paying payroll. We look to make sure that the payee was not paid in advance of hours worked, and that is a statute on that. So you can, and I know a few counties are now struggling with that when you're trying to, historically may have paid the day after or the day of the last day in your pay period, which gives you absolutely no time to process, and are moving towards expanding that time. That transition is always extremely difficult. There is no way around it. I feel for you. I feel for your employees when you go through it, because they won't understand it and they won't accept it. But again, you can't pay in advance. You've got to have enough time to process all of those attributes of the payroll and make sure that that payroll is correct. Okay. So this is a general list of items and records that we need for audit, so you have an idea what you need to hold on to. As Tammy said, we're hoping that by catching up, you haven't had to store as much as you have in the past. But we'll need your financial ledgers for any year that we're looking at. Your bank statements and reconcilements, now that's going to come from the treasurer's office, but you should have record of your reconcilement between the treasurer and the auditor's office so that you're reconciling your funds. All of the claims or the receipts and any supporting documentation for those for that time period needs to be available. We're not going to look at all of them, but we don't know which one, so all of them have to be available. Minutes of meetings. Going back to that, obviously we've been going through the upload process, so if you are uploading your minutes, we already have them. If you're showing us where they are on the website, we'll go there to get them, so that is part of that process, but they have to be available somehow. Your ordinances and resolutions that you've passed, any contracts that you're paying during that audit period, policies and procedures, including anything you've written down on your internal controls, personnel policies, travel policies, those kinds of things we need to be able to look at. Financial reports, anything you're filing with the state or with the federal government for your grants or any other information. And then the grant documents themselves. We really encourage you to have a grant file that's keeping copies of all of this. As an auditor, you're approving these claims against that grant, so you need to know what are appropriate uses of those grant funds, so you need that information available, and we will be looking at that. We don't audit every single federal program. Again, we choose major programs, but as far as the preparation for the CFA, the Schedule of Expenditure of Federal Awards, we do need all of the grant files, so we can follow up on that. Ricky is going to talk to you tomorrow about the CFA, which is the Schedule of Expenditure of Federal Awards, and the selection of major programs and those audits. Our audit of that does begin with the CFA. I believe, and I feel bad because I was going to check this before I left, but I believe now that you can generate the CFA from your grant schedules. You can see what it's going to look like. If not, when they send your financial statements, they should include the CFA in with that so you can see how that is being presented. If you have questions, and I know a lot of you do, on whether a grant is federal or not, The CFA is only federal, Schedule of Expenditures of Federal Awards. So if it is a state grant, it does not get included on the CFA. So your community crossings grant is state money. It doesn't go on your CFA. So you need to know whether it's federal money or state money. The first and best source is the grant information itself. It should be in there. I know sometimes it's not, which breaks my heart, but it should be in there. If not, you can have the department that applied for it, or if they'll give you the contact if it's a pass to a state agency, contact that state agency to find out whether it's a federal grant or not, what the CFDA number is. If you leave a federal grant off of this schedule, or you include one that is not federal, it can increase our audit time, and as a result, your audit fees, because we're looking at the total disbursements above that threshold. So if you've included state grants that make you look like you need a federal audit when you don't, and we've allocated time and resources to that when you don't need it, that's not, it's a waste of resources for everybody. However, if you have not included something that should have been included, and we come out, and this has happened to me before, you go out on an audit and you're like, well, what's this? And you find out it's a big old state grant that maybe you didn't know about because the department got it or somehow it fell through the cracks, and it suddenly makes you federal, then we got to then summon up the resources, get our federal specialists, get it into the schedule. It's going to take more time. So it's really, really important that grant schedule be as complete and accurate as you can. If you have questions, if you need to find stuff out, don't hesitate to ask. Ricky and I will be glad to do some legwork as we can with it, to get you contact persons at the state that may be able to answer that question. Or if you want us, I've had you send me the grant documents so that I can read through them and tell them, because sometimes it can be confusing, whether it's a federal or state. But make sure when you're, it's very important when you're doing that grant schedule. So based on the dollar amount threshold and the risk-based assessment that we do under federal requirements, we pull some major programs. You might hear terms like Type A and Type B, which really depends on the dollar amount of what's being dispersed. And based on those, we do the actual compliance of those major programs. We go into a lot more detail on those, and that's what's getting reported in your audit report. And during that audit of those major programs, we are looking and we're performing procedures to determine that you have complied as a county with the federal grant requirements. And they're pretty specific on what they want you to do with the money and how they want it. So we're looking at things like allowable activities, allowable costs, period of availability, subrecipient monitoring if this money is going to another unit that you're passing it through like the state does for you. Those kinds of things that we're going down through the line and making sure procurement's another one that we're looking at. Make sure that you are in compliance with what the federal requirements are for that. Okay. Subsequent events, this is where we're, again, with the timing, because we're here, say, in May, and we're looking at through December 31st, 2018. We're in May 2019. We are going to be looking also at what has happened January 1st through now in your county that might impact the financial statements that a reader might want to know about, okay? So again, it lists some of the common things we're looking for. Have you issued new debt? Have there been any changes in your financial situation? Has a major employer moved out? Have you had one of those horrendous black box? Anyway, where you have this huge refund looming over you, and the other units in your county. Are there any lawsuits pending? And we ask your attorneys, can we predict whether they're going to win or lose, or what kind of impact you're going to have, or what kind of loss you're going to have? But really anything else that might materially affect your financial statements going forward. And this, again, is additional information that's given to the reader so that they can make informed decisions based on the information in that audit report. Okay, so at this point in time now, we've identified our risks, we've planned our audit procedures, we've done our testing, and we're ready to make a conclusion on our field work. We feel we have enough audit evidence to form an opinion on whether your financial statements are materially stated. And we talked about earlier, one of the goals of the engagement is to provide that opinion as to the material correctness of the financial statements. So what we all want to see on your independent auditor's report, where there's a copy of it, it's hard to read, but there's a copy of it here, is an unmodified opinion, that no modifications have been made and we feel that your financial statements presented are materially correct. You do have, because it is a regulatory report and not a GAAP report, there is a paragraph that's included that this is not a GAAP report. And so in relation to GAAP, it is not materially correct. And then it will go on to talk about it based on the regulatory basis. If there is any modification of the opinion, additional information will be included in the report. Why there's a modification of the opinion and what we use to make that decision. Again, it can be qualified, it could be a scope limitation, it could be adverse, or we could disclaim an opinion. It has happened, hopefully not very often. The opinion is then attached to the financial statements, and that's the report that we issue. So that is your final product. If there are findings, they will be included in the report. Again, Section 2 are findings related to the financial statements themselves. Section 3 are any findings related to a major program. Often in Section 2 and Section 3, you will see internal control findings. And it is possible, remember, to have no, it's going to sound like a double negative. It is possible that there were no instances of non-compliance with either preparation of your financial statements, they were materially correct, or your compliance with the federal programs, and there can still be an internal control deficiency. Okay, so remember that. So they do appear. Under the federal, there can be a question cost information. If we determine that more than $25,000, which is the current uniform guidance that the federal government gives, if we question more than $25,000, we have to report that. And that is saying we do not believe that that was an appropriate use of the federal dollars in relation to what the federal compliance are. We don't take any further action on that, but again, this audit report is uploaded on the Federal Clearinghouse, and whatever oversight agency for that program is, will be looking at it, and they will probably be getting back in touch with you on that. If we find any known or likely fraud affecting a federal award, if there is any significant instance of abuse relating to the major programs, we need to report that. Under the audit results and comments, if we find any significant significant non-compliance with a statute or one of the SBOA uniform compliance guidelines, that's directives, manual, county bulletins, we need to report that in the audit report. If it is not significant enough for us to consider, and this is really auditor judgment, again, you ask your field examiner, if such a thing comes up, to explain it to you what they base their opinion on and why they chose one direction or another. But if it is not significant enough to be reported, it can still go in a management letter, which means we're bringing your attention to it so that you can follow up on it. It is possible to have a discussion only, and this is an immaterial noncompliance. We might test 60 receipts in a department and find one that wasn't deposited timely. We're not going to put that in a management letter, but we're going to tell the department head. Probably we're not even going to tell you or the governing board. We're just going to tell the department head, hey, you had one time, need to look at your controls, make sure this doesn't increase or happen more often. We do document those discussion items within the work papers, so it's not like we're not going to know about them the next time we come in, and we will follow up on them, but it's just going to stay within the department itself. Communication. Again, we talked at the very beginning with the entrance how you want to set up your communication on issues that are found, both for your office and for your governing boards. There should not be any surprises at the exit conference. You should already know what's going to be written up as relates to your office. I'm not saying you wouldn't know maybe for another department, but for your office, you should know. If it's on the financial statements or compliance of your office itself, you should know before the exit. That should have been communicated to you. At the exit conference, the field examiners will discuss any issues that were found that are going to be on the audit report. They'll show you which ones are going to be on the audit report. They will be meeting not only with your office for the financial statements, but they will also have your governing board there. There was a change in the statute, and if you go to Indiana Code 5-11-5-1, call me if you want this, but the statute for the exit conference within the State Board of Accounts does say provide the following information, and this is a change from what we had done in the past. The information discussed is confidential until the report is released. The exit conference may not be electronically recorded. If the majority of the governing board is present, they shall be considered to be in an executive meeting. However, you do not have to provide notice of that meeting. So it's a little bit different, but that's in a separate statute from the statute on executive sessions. Okay. They will show you a copy of the draft report so you have a chance to look it over, review it, discuss any findings with you, any financial statements, the federal report itself, so you have a chance to look over all of that. If there is a supplemental report, they will also go over that with you, and this is where we pull all of the findings together and comments. If there is a management letter, they will be discussing that with the office holder and also with the governing board. If it's a management letter level, then your governing board is made aware of that. They really usually go over information to make sure we have correct information for the report about the official's term in office, what email you use. Physical addresses are verified if we're not using email. Again, if you have any questions about the audit process, about the final report, about the comments, be sure and ask your field examiner about it to explain it to you. Okay, don't let them get out of there without telling you, making sure you all understand. You may not agree with them. I'm not saying you're going to totally agree with everything, but that you understand it, where they're coming from and what they're talking about. If you don't agree, or if you do and you're going to be taking corrective action, you always have the openness to respond. You can do an official response to the report itself. Oops. Pushed the wrong arrows. Okay, if you're going to do an official response, you have 10 days to get that into our office, and they'll give you an email to send it into. The official response appears in the report at the end of it, or at the end of each section. So if there is a comment for your office, at the end of that section, there will be your response to that comment. If you have a federal finding, you do have to provide a corrective action plan by the time of the exit on how you plan to, whether you or the department, how they plan to correct the federal findings. Repeat findings we talked about last time. So if a finding appears in a report more than once, it is considered a repeat finding. Those will be brought to your attention. They will specifically tell you if a finding is a repeat finding. And that requires a corrective action plan through the template on our website. That template is more complicated than what is required for a federal corrective action plan, so keep that in mind. You have 10 days to do the corrective action plan through that template. Instructions are given to you. There's also instructions on our website. If you have questions about the process, let me know, let Ricky know. We do follow up on those corrective action plans, so be aware of that. Okay. Audit reports are sent to the current and prior official. the president of the governing board, and any other officials that request a copy. They are also posted to our website. We highly encourage you to go to the website and get familiar with it and get comfortable with it. We are working on ways to improve it, but make sure that you are using that. You can find any audit report that we've released on any unit on that website, including prior reports on your county. Are there any questions about anything we've gone over?
Just a moment ago, you cited a code, and I didn't get to write it down. I wasn't quick enough today, Lori.
Was that on the exit?
Yes.
5-11-5-1.
I'm from Marion County, and we do have a company that BKD does all of our audits. Two questions, though, that I've had. We've also are in our IRS audit as well right now. If you were to audit us, and we had, and this is really common in Marion County, a firefighter who received a pay, a W-2 at the end of the year, W-4, and he received a 1099 because he has an outside business. The firefighters hired him to do some landscaping and yard work. What would be acceptable proof to you to support the 1099?
You're not going to like this, but it's whatever the IRS would accept.
It's whatever
We
the
would defer
IRS
to them because they're the ones that have that rule.
Okay.
It's their forms.
Because they would, they're just saying, get what you can to prove that he has a separate business.
They want, they're just going to want sufficient information that they can accept that it was an acceptable method of paying them. So they really are opening it up. Get what you, when they say get what you can, they really are trying to get for you to get that if he has any, something that shows that he had that business established.
Well, he unfortunately didn't go through the Secretary of State, so they told him business. Shirley has just basically told him business cards, anything that you've had other customers receiving and so forth.
Right.
So I just wanted to see if you guys had an answer. The other question that I had is on the receipting. We've had repeated findings on our receipting because of other departments. They don't like to balance monthly. They don't like to turn. So I wondered if we've put some changes in and some internal controls, and we think we've got them compliant this year. But if we get called to answer for that, if the auditor gets called to answer for that, can we bring that department and even tell that department, you're going to appear to explain this?
I don't see why not.
Because some of them are department heads, which is easier to call the mayor and say, your department isn't, but when it's under a separately elected official, it's a different issue. Mm-hmm. But I think they should be, as many times as the auditor's office had contacted them, they should have to come and answer for that as well.
I don't see why not. Now, how you're going to enforce that, I don't know, but I don't see why not.
Well, I will tell them, you are coming with me. I'm not answering why you're lazy. Lazy and late.
Any more questions?
I have a simple question. I don't want to have to deal with all her problems because I know she's a hard worker and that's a lot of problems. That's a lot of problems. But my simple question is this. Okay, so I think we're going to fall into having two audits in the future. The federal CFA and the regular. Now, Karen Braun just came, so we're sort of already starting this one. So it may be the next time that will hit us. We might get a year reprieve. But when we get the two separate audits, will you follow the same format for the federal audit that you do for the current for the combined audit and?
Format, you mean the report or the audit
well, where you
process?
have
or-
the audit process, where you have the entrance interview and the
Yes,
exit
the audit
interview.
process is not going to change. Okay. It's Patty's turn. Give you your lunch instructions.
Okay, so